Hi there, traders. This is Brad Gilbert with today's trading action. All right, a few things on the cards. BOJ meeting, interest rate decision, no change in rates expected there, so don't get all excited about that. The key event is leading into the next, or later today, is the Fed decision, right? Now, there's no change of rates expected at all, right? And the markets have fully priced that in, so don't think you're going to be seeing anything different. But with the Trump administration coming into power and all these tariffs going around, there's a lot of speculation around what their projections are going to be, right? So no change of rates. It's this stuff here, right? And you know what? The other thing is I've been reading is how speculative are their assumptions or what they're going to be saying. So they're going to be very cautious. Now, if they came out and lowered all their projections, then I think we see a lower dollar, but it's a bit too early now. They're just guessing, right? It's a guessing game. So we might see volatility that is not too friendly across the board, right? Hopefully they just come out. There's a bit of caution. There's no dramatic shifts. And then what we'll see with that, okay, if I just come back to the charts, is the same steady move on the currencies, right? So if I just go into the daily charts, you can see the dollar index breaking down, dollar Swiss, euro is looking to break up through 109.50. Sterling's already on the charge. We've got the commodity currencies doing their own thing, right? But they are starting to move with that overall move. And dollar yen, well, it takes a back seat. If there's something happening, dollar yen goes to sleep. When there's nothing happening, that's when dollar yen sort of comes into play. So for me at the moment, the core currencies, and if I just come back to the hourly charts, right, just highlighting, right? We had a few events yesterday. We've got Putin and Trump meeting, right? We've had some Germans. The announced a massive spending splurge on the economy and military. So you see this price action here. This is not friendly, right? Same thing happened on sterling and sort of across the board, right? So at the moment, as we lead into the key event, which is the Fed. Now, the Fed meeting is a massive uncertainty, right? Because it's all speculative. So just be aware, you're not going to see the big move just yet, but there is potential cash in the market. And, at the moment, we've got about, a good 12, 14 hours or so before we see anything from the Fed. So I think there's a chance here we could get into some trades. And what I'm talking about is getting short dollars. It looks like the wave, but to me, there is talk of big option structures around 110 the figure in euro. That could potentially drag euro to the top side. Sterling, like the price action isn't exactly perfect, but it is headed in the right direction. So dollar weakness for me is the way to go. You can't really plan too much ahead of the curve here with if I just bring back the main data there. Looking at the overall components here, when you don't have any numbers, no projections, no nothing, it's uncertainty. So to me, yeah, we've got opportunities to get into some short dollar trades. The dollar is trending down at the moment. That's worth having a look at. But when it comes time to the Fed, I would be closing those out because you are going into a gambling situation. Now, just to the market at the moment, well, the Fed yields pretty steady. If anything, I would say that's sideways. Now, the NASDAQ had a down 1.6% yesterday. At the moment, equities are having a little bit of a recovery, but we're not seeing that clear risk on, risk off profile, right? Equities up and actually dollar up and the other pairs down. So now, is this important? Well, it does go some way to sort of telling us exactly if we've got perfect markets, right? And if I just bring the live trade hub over, yields sort of sideways, dollar index up, US equities up. Now, in the old days, that wouldn't be too much of an issue, but everyone gets really focused on this risk on, risk off profile. It's very easy to be confident when the market is behaving uniformly. At the moment, it's not, right? So there's no real risk on, risk off profile. Don't get all excited about that. We do have a live trading session. It's a coaching session today. I've got a few different topics here to be talking about, right? Talking about trade size and trading opportunities, and trying to get you in that mental mindset of understanding the market conditions to adapting to what your plan should be. Okay. And it's going to be quite interesting for traders who want to get some extra knowledge. Now, coming into the currencies in the zone, I've got euro and sterling, same as yesterday, going up, dollar Swiss going down. If anything, I like dollar Swiss a little bit more. It's just the levels are a little bit closer, and then we're all getting set up for the Aussie data come Thursday. Now, prime time analysis, will go some way to explaining where that dollar bullish tone comes from. Okay, long term and short term, it's going up. Um, Long-term momentum, it's up, but it is in an overbought situation, and that's why that signal there is a little bit dimmer, a little bit lighter, because it is still going up, but it's not ideal, right? And short-term momentum going down. So you can see here, sterling and euro both sort of behaving the same. So to me, you've got to be looking to get long these pairs, right? But long term, they're a little bit exhausted. So really, you're focusing on the short term, because if the short term swings around, then we've got momentum on our side with direction, right? That's how this works. Now, and so the dollar pairs, once again, dollar Swiss looks to me the perfect one. Looking at the hourly time frame, we get a change of momentum there, and then we are looking for a nice trade to the downside. The live sessions, which I've already covered, if you want to get into those, they are coming up. Wednesday, 7 a.m. London, and Thursday, 11 a.m. Sydney time, right, for those employment numbers. And the 10-week challenge, we have kicked this off. Sort of a nice, easy, what I would call, or what I do call, a stocking filler, a trade that sort of just taps in 1 or 2K as we're sort of waiting for the key events. We're not looking for anything more than that. So not a bad little start, but we need to see what's going on with the Fed, because you can equate your P&L to the trading opportunities. And when we come back and look at the opportunities coming up, yeah, we've got structure on the charts. This is the big event, and we don't have any data to work with, right? So you don't know if it's weaker or better or worse. I mean, you can go and have a look at their last projections and then sort of work out yourself exactly if the new projections are weaker or stronger. But there's a big consensus in the market that they will come out and say, listen, this is us guessing. We don't exactly know. This is a massive uncertainty. So we've got some speculative projections, and that, you know what, that does have credibility because it is the Fed, but they may not go too far into moving the actual currencies. I'm expecting volatility across the board there, and that is why I'm saying there could be some opportunities to get in some trades ahead of that, but I'd be closing out the positions as we lead into it, right? So we've got things happening, guys. It's the trend. The dollar trend is starting to move lower. We just need things to, like, we need the Trump to sort of just cool his jets. Don't need to come out with anything drastic. The US numbers are sort of a little bit on the soft side. We've got the dollar retreating. Euro, sterling, Aussie, Kiwi have been on the downside for a while. They are coming back, and there's room for these things to explode topside. We just need the dollar to behave itself and get there, right? Now, if you are wondering why there's a bit of a hangover here on Aussie, Kiwi, CAD, these are the commodity currencies. Commodities gave back some good gains yesterday after a big up day the previous day. This is all related to the China tariffs, right? The commodity currencies are the ones that are going to be held back the most or impacted the most, and that's why they're out of the loop at the moment. The old safe haven trade here, dollar yen, well, as I said, it takes a back seat when there's other things on. You really want to be focusing on dollar Swiss, euro, and sterling, like the Europeans, if you want to call them that, because that's where the action is, and these ones are behaving very nicely. All right. So that's where we are at the moment, guys. Not much else to really run through from here. Just keep it real, short-term trades. Let's see what the Fed have got to say, and then rock and roll from there. All right, guys, have a good one. All the best. Cheerio.